Hi there, welcome to Kneppy Invest and welcome to March 12, 2025. There's about 54 minutes left of trading today on another pretty negative day. Bloodbath, a red day. This was to be expected because of what Trump did in regards to imposing tariffs on Australian steel and aluminium. We'll talk about that later in the video. But who knows what's going to happen in the last hour? Maybe we're going to see an almighty rally, and maybe we're going to be up by the end of trading today. But I'd say that's slim to almost zero chance of happening. My background today, by the way, is Clouds Rest in Yosemite, an absolutely amazing hike. I did this in late September 2017. Yep, just after a snowstorm. That's why it's a lot of snow there. So it wasn't in winter. In fact, this would have been the second day of autumn. So their autumn begins a little bit later than ours. Their seasons begin a little bit later than our seasons. An amazing hike. So that's you can actually hike this from the Yosemite Valley, and you can actually hike. In fact, I'm planning to do a hike from the valley to Half Dome and then to Clouds Rest. It should take me all day, but an amazing view, 360 views. In fact, if you look the other way from where this photo is taken, I actually did take this. If you look the other way, you can actually see Half Dome. In fact, this is higher than Half Dome. Anyway, this is not about talking about nice hikes or great hikes in the United States. This is about the ASX today. And my plans for this video include going through the ASX today, looking at the best and worst performing sectors, indices, and also companies. I do have a top 5 stocks of the day. However, no standalone stock of the day video. Nothing really inspired me to do that. Yesterday with Ramelius, I wasn't planning to do a standalone video, but Ramelius did inspire me to do that. I will show you a tweet, and probably I'm going to look at whether we're in correction territory. I think most of the indices are already, but I think with the down day today, I would say XJO is very close to being in correction, the correction zone. And corrections happen quite often. Actually, in fact, I just Googled it before I started recording. Corrections happen quite often. This one here from Confident Wealth Advisor says a market decline 10% or more every 1.2 years since 1980. Another one here says it happens every 2 years. So it happens quite often. Now, the next step from a correction is a crash, and that doesn't happen all that often. And there is a chance we're heading in that direction. I'll give you that. And also, did I mention I want to show you a tweet? Yes, a tweet. And then we'll have a look at maybe one or two of your comments once I go through the top 5 stocks of the day. First, the tweet. Okay, so Trump has decided that he's imposing tariffs on us. And there was this White House press conference. I don't know what we call these. And this really peeves me off. I'm not sure what's happening when it comes to tariffs and Trump and his cronies, but they have got it all wrong. I'm not sure if they're intentionally lying or if they just don't know how tariffs work. So this was an exchange between the press secretary, Caroline Levitt, and an AP reporter. And the AP reporter just mentioned tariffs are tax hikes on American consumers, because that's how tariffs work. The importer pays the tariffs and he passes on the increase in costs, because that's what it is, a tax, onto the consumer. And Caroline Levitt just said, no, you're wrong. Actually, initially she said, I'm not sure if she initially said, but she did correct him, even though she's wrong, that the country they put the tariff on pays a tax or pays a tariff. That's completely wrong, completely wrong. And I'm starting to think, they actually believe this. I've always thought they were just lying about it, trying to mislead the public. But I'm starting to believe, they actually think that if they put 20% tariffs on China, China pays a tariff. It's just insane that they would believe that, because what country can impose taxes, which tariff is, onto the citizens of another country? It doesn't happen. So how a tariff works is they put tariffs on, say, all products from China, and when those products enter the US port, the importer pays a tariff. So they have a big sheet of all the tariffs, and they pay the tariff, and then they're passing on the cost to the American consumer. So it's a hike in taxes. And she actually said, no, it's a decrease in taxes for the American consumer. I I've always believed that they were actually lying to the American people and it sort of makes sense because Trump mentioned he loves the uneducated. And a lot of people are very uneducated when it comes to tariffs. So they believe it. When he says that, they believe it, that if they put tariffs onto the China or Chinese goods, it's China who pays the tariffs. That sounds great, but that's not how the way it works. But now I'm thinking they might not know how it works. And this is actually even more concerning because this is a possibility where history doesn't repeat, but it does often rhyme. We're going down the same path as 1930, Smoot-Hawley, when they believed imposing tariffs, broad tariffs on all countries in the world was going to be beneficial for the American economy as they entered into the Great Recession. And it actually caused, I won't say it caused a Great Recession, but it did make it much worse. And in fact, it has been stated that the Smoot-Hawley Tariff Act is one of the worst cases of sabotage to an economy for the whole world that has ever existed. And it seems like we're going down that same path. And that is why the stock markets around the world are crashing right now because of tariffs. So you can see here, there was even readers added context to this video on another post. Important context for the video. White House Press Secretary Leavitt is incorrect here. Tariffs are not a tax hike on foreign countries. Tariffs are paid by the importer, and the burden of the tariff has been found to be mostly passed on to the consumer, which is absolutely right. And it's just mind-boggling. It's just infuriating that they're going down this path. I don't know what it is. It's just weird. It's weird and wrong, and it's frustrating for someone who knows how tariffs work. It's just so frustrating. Anyway, that's why I'm going to talk about it because I'm getting a little bit too frustrated here. On a good news, we now have self-driving and self-service KFC trucks, food trucks in China. Wow, what a great thing. It's interesting on this particular tweet. Imagine what would happen if you release this thing in any large Western city. Yes, I can imagine what might happen. Anyway, I think this is great. And I'm a big believer and fascinated by technology and how the world is going to be so different in another 20 years or so. Okay, so that's the tweets. And I'm sorry if I have got a little bit too frustrated with that tariff thing because in my opinion, broad tariffs are really bad. I think targeted tariffs are good, can be helpful, but broad tariffs are bad because we have history showing it is bad. Smoot-Hawley, never heard of that? Google it. If you've ever watched Ferris Bueller Days Off, they're all falling asleep because he's talking about Smoot-Hawley, but tariffs are bad. Anyway, let's have a look at the ASX today. And yeah, what can you say? It's been another negative day. I'm going to refresh this. Maybe we've seen a bounce. Oh, a small bounce. I've been looking during the day. I've been looking at the 1 minute chart just to see what's been happening. And we actually did see a little bit of bounce, a pretty good bounce between about 11:30 and 12:30. And then that bounce came to a pretty quick end. So what can you say about the ASX today? So the XGO is another, this looks like a crash, doesn't it? It looks like a crash. Now, I would say the XGO is significantly oversold, but just because it is, doesn't mean we're going to see a significant bounce. It all depends on what happens in America overnight. Trump put, was it 50% tariffs on Canadian goods? Then he backtracked because the Ontario governor, not governor, premier, whatever they call it over there, was threatening to cut off electricity to American northern states because they supply electricity to those American northern states. And someone actually mentioned, probably a MAGA person, mentioned this would be an act of war. You can't deny people electricity. Well, if you're getting from another country, sure, you can. Particularly if the United States is harming, really trying to harm Canada. Anyway, so I think we're in correction territory. Let's just have a look. Let's have a look. Which one is it? I think it's this one. Yeah, price range in trading view. You can just have a look. This. Oh no, I just did that wrong. I just wanted to move this. Let's go back. So if we take it from the high to where it is right now, we're right on correction. There we go. No, I've just want to decrease that a little bit more. And we need to increase that a little bit more. There we go. So from the high to where it is right now, the XJO is down 10%. So this is a correction. Now, corrections do happen quite often. In fact, the last correction I would assume was maybe in late 2023. Let's check that out. Was this a correction? Oh, got very close. Not quite. Very close. It was about 9.5%. Yeah, 9.5%. Definitely a correction back in 2022. So these sort of corrections happen quite frequently. But I'll be honest with you. When we do go through or have been through a correction over the last 15 years, I haven't been concerned. I am concerned now. I am concerned now because of tariffs. That is how bad tariffs are that I am concerned. And typically I'm not concerned. Now, I do have a strategy and I'm going through my strategy right now. So that does alleviate any concerns. For instance, I do have, or I am trading companies and I'm selling some of these. Whenever I get a sell or the share price of these companies I'm trading goes below a sell point, I sell. So I'm building up my cash because I'm managing risk. This is all about risk managing, protecting my capital. And if we do see further downside, maybe significant downside, my cash levels will increase. And then if we start to see the market turn, then I'll start to decrease my cash levels. So this is all about managing risk and protecting my capital. That is why my technical portfolio, my trading portfolio is actually going down in size of trades. For instance, probably today, I'll just show you, I think Cube Holdings, that fell through my sell point. So if we don't see a significant bounce tomorrow, I'll be selling this at a small profit, but it's still a profit. So that is what I'm doing and have been doing over the last few weeks. And my cash levels are now to the point where I have, what is it, $160,000 to play with. It's gone from not much, say 30, 40,000 to 160,000. Now, another reason behind that is because I need a little bit more liquidity because I'm buying a house. I have to pay stamp duty, which is due in 2 weeks. Then I have to pay a deposit on the house I'm building. That's probably not another 2 months away, but I need a little bit of liquidity there to maintain a little bit of cash so I can pay all these stuff that's going to happen. Anyway, so that is my plans moving forward. Well, yeah, that is my plan moving forward. It's just to protect my capital. I have a plan. And that's the most important thing, having a plan. Now on to today. I've already sort of gone through that. Yeah, so we saw the most of the redness today. I don't know what to say. Most of the fall today was near the beginning of trading. And it's been going sort of sideways through most of the day. And this is regards to all three indices. So XAO, XJO, and XTX. They've been going sideways for most of the day. So at least we haven't seen the market drop all through the day. That would be a really bad sign. Anyway, best performing sectors, utilities. In fact, utilities probably has had a pretty good week, comparatively speaking. Yeah, only down 0.9%. When you got IT down 8%, discretionary down 7.7%, financials down 7%. Utilities have had a relatively good week. Same with mining. Materials only down 1.65% in the week. But apart from utilities, everything else is down. All the other sectors are down by more than 0.5%. Discretionary down 2.65%. Industrials down 2.1%. Financials down 2%. And healthcare down 1.8%. Gold's had a good day, up 0.37%. I did know that just because I do have a few gold companies and they've done actually fairly well today. So, yeah, so it's good to be in gold right now. Other than that, most of the other indices are down by more than 1%, including the ASX 20 down 1.81%. I'm assuming most are down. I'm going to say maybe two companies are up. Maybe one company is up. Which company is that? I'm trying to think. Utilities. Is it Telstra? That's in telecommunications. I'm trying to think what's in utilities. Is that, I'm going to say Transurban for some reason. I don't know. Transurban. Oh, Telstra. It was Telstra. Gee, that was my first thought, Telstra. Where's Transurban? Oh, it's actually done pretty badly today. There you are, Telstra. I actually don't mind Telstra right now. They had a good report. In fact, even the chart doesn't look half bad. I believe they went ex-dividend. I'm pretty sure they went ex-dividend not that long ago. Actually, I think it was like 2-3 weeks ago, if I remember. Ex-dividend, yeah, 26th of, yeah, about 2 weeks ago. So the chart doesn't look that bad. I don't mind this chart at all. when it comes to Telstra. Worst performing company in the ASX 20 is actually ANZ, Aristocrat, PHP, Brambles, and CBA all have had pretty bad days. Fun enough, I clicked on the percentage change and it put BHP in there. This is listed by alphabetical. So let's do that again. Oh, it does. It goes through three. It goes through worst performing, best performing, and then alphabetical when you click on the percentage change. Anyway, worst performing company is Wesfarmers. Discretionary, yeah, I think. Brambles, Transurban, NAB, and Westpac. And there's heaps of companies down by more than 2%. Okay, so let's move on. Is the ASX 200 about to crash? Lessons from 50 years of stock market crashes and calamities. I wonder if Carl Camberlingo wrote this. Yep. This could be a good read. I'll read this after I finish recording. I do like his articles. Yeah. So this could be a good little read. Maybe I'll give you some homework. And there will be exam tomorrow. So you have to get 80% to pass this exam. So your exam is to read this particular article from Carl Capolingua. Is the ASX 200 about to crash? Lessons from 50 years of stock market crashes and calamities. The reason I need to test you is because this is called a lesson. And we need to know that you've learned. Anyway, so I'll look at this article. Hopefully I don't forget. But now, before we do that, oh, by the way, 3 high-quality stocks to buy during the Trump slump panic. I don't know if we can call this a panic. I think this is well ordered. This is reasonable, what's happening right now. I won't click on this. It's Livewire. And in fact, I did read this morning, and it was AUB Group, Pinnacle, which is not a good pick because most fund managers and companies like that will drop a lot. For instance, let's have a look at Pinnacle. Pinnacle should be dropping. Yeah, Pinnacle should be dropping a fair bit. So I'm not sure if that's a really good pick from whoever chose these. Where is it? These 3 companies. What was the other one? Pinnacle, Net Wealth. Yeah, Net Wealth, Pinnacle, and AUB. Yeah, so you can just see Pinnacle. It's probably the complete opposite to what you want to buy during this sort of situation. I'd say it's overvalued and it's dropping like a rock. It's gone from 27 to 9 to 18, so it's dropped 33%. In fact, if I was trading this, I would be getting out. If I was trading it. Maybe it's high quality and maybe I don't want to trade it. Maybe I just want to keep it for a long term. Okay, so let's have a look at the top gainers today. I'm sort of rambling on because there's not much to talk about, to be honest with you. Top gainers, there's not going to be anything here. I can almost guarantee you. There was an interesting acquisition or something with Hancock and Gore, but look at the turnover. It's not worth talking about. That particular company, $120 million. I don't even know what they do, Hancock and Gore, but I did see they made an acquisition. And there's really nothing here. All these companies are fairly small. With Gorilla Gold Mines, the biggest one at 223 million. And I've talked about this company before because I remember the ticker code. It's Horse 8, GG8. List of companies or best performing companies by market cap. Nickel Industries, Capstone, bad day yesterday, rebound today. We can move on. Johns Lyng Group, bad day yesterday, rebound today. We can move on. Tasme released an investor presentation, I believe. I did not have a look at it. There must have been something interesting in this one. They released it at 12:31 p.m. Investor Roadshow presentation. It was marked price sensitive, so there must have been something interesting in there. And we can actually confirm that just by looking at the chart. So I'm not sure if they did in-house presentation, and it would have been before the release of this particular presentation. But if we have a look at the chart and if we notice the share price popping up at a certain time, all we have to do is have a look at the 1 day. And yeah, the share price really took off just after 12 p.m., which coincides with the release of that investor presentation. So there must have been something good in it. And we'll just have a quick look at the chart. This is another one I was trading and I've got out. And if you have a look at the chart, yeah, it's a 1 day thing. This doesn't mean I'm getting back in. Doesn't mean I'm getting back in at all. But you can just see how the sentiment in this company has just shifted rapidly to negative. And the share price has dropped a fair bit as well. I think the reason I got out of Tasme was when they released their results, the market reaction wasn't that good, which surprised me. Anyway, what else do we have here? Novonix, Step One Clothing. There's really nothing to talk about here. I'm sorry, like Brain Chip and Aurelia Metals and WIA Gold and Berkeley Energia. When I'm saying there's nothing to talk about, there's nothing to talk about. Uh, Top losers. I don't think there's going to be anything here among the percentage change. Most of these are fairly small, apart from Austal, which I will talk about when I talk about when I get into the top 5 stocks. In fact, if I did have a stock of the day, it would be Austal. Share price down 19%. But I rarely talk about capital raisings, and this is a capital raising. So there's not much to talk about today. So that's why Austal is in the top 5. Plus, the chart was looking really good before this. And I think they have done exactly what management should do. The share price has gone on a really good run. Do a capital raising, raise some capital. It does, it's good value. It provides good value for shareholders, but they must have done it at a pretty good discount with the share price down 19%, which I don't agree with. Not a fan of that. Anything else here? No, nothing. Not surprising. Top losers by market cap. Ramelius Resources down again. Let's have a look at chart for this one. So I talked about this company yesterday. In fact, it was a stock of the day. I thought there might have been a bit of a rebound, but it's dropped again. So it's getting to the point where, in fact, if I had to put like a support zone or line, it'll be right there at about $2.10. The reason for that is back in about a year ago, it took a while for Ramelius to get above that level, and eventually it did. And it has or did oscillate above and below that level for a while at the end of last year and went on a really good run. And now it's right at that level again. So it could be a support level at about $2.10. But really big volume have come in the last 2 days because of their mine plan for Mount Magnet, and the market doesn't like their plan, and understandably so. I'll talk about IPH, down 10%. That is in my top 5. Smart Group isn't. Now, some of these companies might have gone ex-dividend. And that's why some of these companies' share price might be down, is because they've gone ex-dividend. So let's have a look. Nope, 6th of March. Did they release anything? No, they have not. So this could be just a bit of noise. What else? Fiducian. I do own Fiducian. I don't think they went. Did they go ex-dividend? I don't think they did. I could be wrong. No, the one company I do know, or definitely know, that went ex-dividend was Motorcycle Holdings, which is another company I'm trading. Share price down 6% or 12 cents. They definitely went ex-dividend today. Yeah, 8 cents dividend, ex-dividend date 12th of March. Because I saw that down on open. I was like, well, why is it down on open? Yeah, they've gone ex-dividend, which is fine. So there could be quite a few companies in here who have gone ex-dividend. There's Motorcycle Holdings, by the way. Other than that, nothing much to talk about here. Okay, so let's go to the top 5 stocks of the day. By the way, ASX 20 doing a little bit of a rebound, or ASX 200 up to, it's only down 1.5% now. It was down like 1.7% when I started recording this video. So we've seen a little bit of bounce. We might not see this bounce just yet. Yeah, down 1.7% in TradingView. And the reason we don't see the bounce is because in TradingView, it's delayed by 20 minutes. So if you go to Combank, yeah, down 1.43%. So nice little rebound. You know, this is maybe a buy the dip situation, but we saw that yesterday and it fizzled out. I do like to go to ComSec, just have a look at the 1-minute chart on days like this, and you can see it rebounding. Yeah, so this is a nice little rebound in the, I'll get rid of the moving averages. Yeah, this is a nice little rebound. It's rebounded in the last, say, 20 or so minutes. Will it continue? Not sure. Okay, so let's go to the top 5 stocks of the day, starting with, actually before that, if I had no other options, I was going to talk about 2 companies who hired a new CEO. The first company was Pioneer Lithium, company I've never heard of, but they hired Michael Bevan as CEO. And my first thought when I saw that was, oh, the cricketer, but it's spelled differently. It's Beven, not Bevan. But the first thought was they've hired the cricketer, which, you know, sometimes happens. We do. There are a few companies on the ASX who have hired famous people. Brad Hackett's probably the most famous one as a CEO. Is he GDG? Grant Hackett GDG. I have a feeling it's GDG. So, CEO, yeah, Generation Development Group, GDG. So it can happen that a famous person, a famous sport person, can be CEO, but the name Michael Bevan, it's spelled slightly different. And then just above Pioneer Lithium, we have a company called SRJ Technologies. Not sure what they do, and they appointed industry veteran Kurt Reeves as CEO. My first thought was Keanu Reeves, but yeah, Kurt is completely different than Keanu. But I just thought Keanu Reeves, and I just thought within a few announcements, we had two very famous people being announced as CEO. That would be really interesting if Keanu Reeves was appointed CEO of a small cap company, probably a micro cap company on the ASX, and I'm not sure the market would like it. Okay, so let's go to, oh, by the way, no, I was going to say I didn't include Core Lithium in the top 5. I did. In fact, Core Lithium is number 5 stock of the day. Share price up 2%. So Core Lithium used to be known as something else. Then they changed the name because lithium went on a bit of a tear. So they changed the name to Core Lithium. In fact, I'm going to check what they used to be called. In Market Index, if a company does change the name, they will actually tell you. Now, they haven't said it here. Oh, no, they haven't said it here. Sometimes they'll just mention in the snapshot that they used to be named as something else. But all you have to do is go to their announcements, go back a few years. And in fact, they're talking about gold in 2020. Look, new prospect with Bino Gold Project. So they wouldn't have been Core Lithium at this point. Let's have a look. Well, they were called at this point. Yeah, they were Core Lithium. Sorry, they were Core Lithium at that point. Now I've got to go all the way back. I should have done that. Let's go further back. Yeah, they're talking about some lithium back in April of 2020. So they might have changed their name before that first run in lithium. When was that? 2018 or something like that? They're talking about lithium here still. Okay, still talking about lithium in 2017. I have a feeling they did have the name Core in their, yeah, Core Exploration. That's it. Core Exploration. Then they changed the name to Core Lithium. And today they've just announced a gold, some sort of gold hit or something. Yeah, large gold system emerging at Shoebridge. So they were, I think, focusing completely on lithium, but they've sort of pivoted back to gold. So interesting little announcement for Core Lithium. And I do think, this is just my opinion, I think some people would disagree with this. I do think it would be very beneficial for some mining companies to be diverse. Just don't focus on one commodity like lithium. Focus on a few because commodities go through cycles and those cycles can be different from each other. So maybe, and we can actually see that right now with lithium and gold. Gold's going through a really nice bull run. Lithium's going complete opposite direction. Lithium and iron ore. Well, lithium's much weaker than iron ore, but iron ore's not doing that great, and mineral resources have been affected by that. So I don't think this is a bad thing. But some people would probably argue just focus on one thing. Maybe that's what your expertise is in, lithium. So just focus on lithium if that's where your expertise is. So I do sort of understand that. But sometimes you will see small mining companies, they will sell off some of their mining rights to commodities. Like if they've got a little project, if they've got a tenement or something, if that particular commodity is not going good, they'll just sell that off. I think that's the wrong thing to do. Just wait because cycles turn, and I think you do have to be patient on occasion. And I'll be honest with you, the best time to be buying lithium companies right now, and this is not for you and me, this is for the major mining companies, is right now. This is the time to be buying lithium companies when they're on the cheap. So maybe someone could come in and buy Core Lithium. Share price down to 7 cents. It wasn't that long ago. This share price of this company was like $2.80 or something. Anyway, I did not have a look at this announcement, but share price is up a little bit. So let's have a look at the chart for Core Lithium. Is it time to get excited about this company? I think no. I think you can remain a little bit patient with Core Lithium. Share price is still in the funk. It's still in a downtrend. There's no end in sight to this downtrend. They did have a lithium mine in production. They've suspended that production because obviously now's not the time to be mining lithium if your cost of getting lithium out of the ground is quite high. And I think that's pretty true for Core Lithium. And the share price, yeah, when lithium was really hot, share price of this company was, it was only $1.90. I thought it was higher than that, but it doesn't really matter. Share price has gone from $1.90 to 7.5 cents. And I'm just remaining on the sidelines right now when it comes to Core Lithium. Okay, Pantoro, I've given that away. Coming in number 4, we have a small, no, actually, it's not a small retail. Depending on what you define as small. A company called Briscoe Group. It's a New Zealand based. They own Rebel and I think a hardware store in New Zealand, and they released their results today. And yeah, so this is the only reason it's in the top 5. They released results. Unfortunately, if you really, 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 really want to own shares in this company, I don't know if that's a good idea because liquidity in this company is quite bad on the ASX, maybe not the NZX. In fact, if we have a look at the NZX, so BGP, in fact, if you have a look at the chart for this company on the ASX, it looks horrendous. Yeah, this is the chart of a low liquidity company. Yeah, so I wouldn't recommend buying shares in this company on the ASX, but if you go to the NZX, this is the chart of a good liquidity company. And share price actually in a bit of a downtrend. Anyway, they did release results. And I actually went through this because I like results. I like going through results. So they do own Rebel, and you were saying, and Briscoe's Homeware. Pretty big company. It's almost $1 billion, so it's pretty big. I do like stuff like this, talking about percentage growth. Revenue has been increasing until this year. Looks like revenue is down for the first year. And gross profit margin, this is something I like to look at. So it's really interesting. In the first 2 slides, they talk about revenue growth, which is the first thing I always look at. And then they talk about gross profit margins, which is usually the second thing I look at. So maybe I should like this company a little bit more. Anyway, gross profit margins have been dropping the last 4 years. Probably understandable because a lot of retail companies had pretty good margins because of COVID-19. And they're talking about that how their gross profit margins are back to pre-COVID levels or just above that level. So you wouldn't want to see gross profit margins dropping any further from here. Now, this is probably where you want to see gross profit margins stabilizing, if not going up. And net profit, because gross profit margins have been dropping, even though revenues have been rising, profit has been dropping as well. So reached a peak in 2022, 2023 at 88 million, now down to 68 million. Balance sheet is fine, no problems with that. Customer satisfaction, I suppose I should care. I would care if I was an owner, but I don't really care. And yeah, that's about it. Talking about sustainability, don't care. Supply chain transformation. It's a pretty nice, I'll say this, it is a pretty nice presentation. My only issue, of course, is liquidity. For instance, last time shares were traded in this company was 2 days ago, and prior to that was then 3 days ago. It doesn't trade every single day. And the last time it traded, there was 1 share traded. How annoying would that be if you had a bid in either selling or buying and only 1 of your shares was traded? And you just see it doesn't trade all that often. And actually, in actual fact, on occasion, only 1 share is traded. Look at that. It happened 3 days in a row in January and February. Anyway, so it's Briscoe Group. No point looking at the chart. Well, I suppose we did already. The NZX. Let's have a look at the weekly chart for this one. Not the best looking weekly chart, but you can actually see how the share price sort of went up and down with gross profit margin and profit. So it all matters. Coming in at number 2 or 3, we have Pantoro. If you did see, I actually had their announcement open up. So this company released some drill results at one of the projects called Polar Bear. This was yesterday. I actually saw this and I went, I like this company straight away because I am going to naturally love any company that has a project called Polar Bear. So for full disclosure purposes, I was bitten by a bear when I was 6 years old. And when I say bitten, I mean my finger was in the bear's mouth and its teeth are really sharp and it tore my finger up. So technically it didn't bite me, but it did tear up my finger. And when I say bear, I mean bear cub. But still, bear cub's teeth are fairly sharp. So it didn't actually bite me, but it did tear up my finger. And ever since then, I've loved bears. My favorite creature. And if I had to pick one, polar bear, of course, polar bear. Well, I do like grizzly bears. But anyway, so whenever as soon as I saw this particular announcement, I just wanted to buy Pantoro shares because polar bear, come on. I think it's in West Australia. So that's sort of the wrong region. Anyway, the company did release alongside this result, uh, last night released results, half yearly reports and accounts. So they didn't release it alongside these results. They released it last night at 8:06 p.m., which is probably the latest you can release an announcement. And this company is profitable. This gold producer is profitable. I had a look at this and a really nice growth in revenue. So revenue has increased from 93 million to 153 million. Not sure if that's because they've opened up a new mine, haven't done that much research in this company. The company is profitable, $6.6 million of profit from a pretty big loss. And if you keep going down the financial statements, including the balance sheet here, net assets of 425 million. Pretty nice little increase. Well, maybe not nice, but a small increase from the net assets last year. A lot of cash, $105 million of cash, $16 million of inventory, and not a lot of debt. Just a little bit of debt, not a lot of debt, $64 million of debt. So more cash than debt. So this company has net cash. And balance sheet was pretty good as well. $56 million in operating cash flow. They do spend a fair bit of money, or did spend a fair bit of money on mine properties and development, but they were cash flow positive, and the cash yield did increase from last year. So things to like about Pantoro's results, but I was a little bit surprised to see the market cap of this company is almost $1 billion. I thought it was a little bit lower, $950 million. I thought it was a little bit lower, and that's probably the only slight turnoff. And the other slight turnoff is the shares on issue, 6.6 billion. That's probably why I thought the market cap wasn't that high, because I didn't think the shares on issue would be that much. 6.6 billion shares on issue. So that is a slight turnoff, just along with the market cap is a little bit more than what I really want. But maybe there's going to be significant growth in this company's production over the next few years. I don't know, because they didn't release a presentation. Or they did release a presentation this morning, but Uros Hartley's conference presentation. But I wanted to see a presentation in regards to their results. Did I open this one up? I think I did. Yes, I did, because I had this open and then I closed it. And when I was recording this video, of course, it's going to take 5 years to open up, because that's what I should do is have a look how quick this opens up in Market Index instantly, and in Comsec still opening up. So Rottnest conference, I can't remember if I took anything away from this. No, I didn't take anything away from this. Yeah, anyhow. So some nice results from Pantoro. The chart should look pretty good. This was actually a position or company I was very close to taking a trading position not that long ago. If we have a look at daily chart, and the main reason is the share price went above 10 cents. And to me, that is a special level. So this would have been back in August. Share price did fall below 10 cents briefly, but has gone a nice little run over the past few months. This is not a bad looking chart for Pantoro at all, but shares on issue is a little bit of a red flag for me. Let's move on to company coming in number 2, IPH Limited. I saw the share price of this company was down 10%, and I was thinking, why? Why is the share price down 10%? They released no price sensitive announcements. And then I saw they had released an announcement, resignation of chief financial officer, and it all came together. It all clicked. I don't know who decided this was not price sensitive. This is a sort of announcement that is price sensitive because the market typically panics when this happens. The chief financial officer of IPH has decided that he no longer wants to be a chief financial officer. He wants to do other stuff. And I can't blame him. I reckon this would be a really stressful job, probably really good money, but who wants to be stressful in life? Live a really good life. You only have one life. And there's no need to be stressful. Money is not everything. Anyway, so he did mention John Wadley, or they have mentioned John Wadley wants to pursue opportunities external to the company. Yeah, good for him. So not necessarily anything bad with the company because this happens. This happens. But the market always panics when this happens. Oh, the CFO knows something. He knows something really bad. He's leaving before the crap hits the fan. I think in a way the markets are reacting, and in a way the market is being fed because there is a slight chance, a very slight chance, something bad is happening with IPH and he's getting out before, again, the crap hits the fan. But that's the way the market thinks. The market just overanalyze these sort of things, and the market really risk averse, and this can happen. But because a market is like this can lead to opportunities to buy into these sort of companies at lower valuations. Would I recommend that for IPH? Maybe not. So let's have a look at the chart. By the way, I did a little bit of research on this company about, I would say about 3 months ago, because I thought there would be some good value to this company. I just thought this company is a growth company. The P ratio is fairly low based compared to historical levels. And the one thing I took away when I did research of this company, so for instance, revenue growth over the last 10 years is 23.9%. I was like, oh, that's pretty good. Return equity is 11.6. I'd like that to be a little bit higher. Return invested capital 9.2 and the P ratio 15.8. And I was thinking, oh, there might be some good value in this company. And then I had a look at the earnings per share growth. And over the last 10 years, it's 4.5%. Over the last 5 years, it's 1.7%. And I think this company has been diluting their shareholders by acquisitions or something like that, or the margins have been decreasing. I'm not sure which one. I think I just stopped it. As soon as I saw earnings per share wasn't growing all that quickly, that was a bit of a turn off for me when it comes to this company. But dividend yield at 7.3%, P ratio 15.8. And by the way, P ratio of this company, I think at 15.8 might be really low. Yes, it's really low. The P ratio of this company got down to 15.8 back in March 2018. And according to this, it's 14.3. I'm not sure which one you have to look at. I wonder if this one is updated because there's a massive drop in the P ratio. I wonder if this automatically updates. This would be awesome if this automatically updates. It says the P ratio right now is 14. This is possibly value play just based off this. Possibly. Now let's have a look at the chart. Now, just based off the chart, no way, Jose. So I think this comes back to, could this company be high quality? I think, if anything, it's trending towards, it wants to be high quality, but it's not there. I need to see a little bit better return on equity and return on invested capital. And I need to see that earnings per share growth be a little bit higher than whatever it was. It's fairly low. And then you have a look at the chart, and the first thing that comes, you get from this particular chart is, ew. Now, with the share price dropping significantly today, I think this could be an overreaction. Could be. And if you have a look at the weekly chart, by the way, you can see that massive drop in share price when the P ratio got down to 15.8. That was an opportunity because look at the V-shaped recovery. That was a pretty good V-shaped recovery. So this could be an opportunity. That's all I'm going to say because the CFO resigned. Coming in number 2 or number 1, we have Austal, the stock of the day. Share price down 22.22%. We are just about into the closing auction. In fact, if you look at the cause of sales, yes, there it is. Oh, closing auction should be any second now. And there we are. We're in the closing auction. And by the way, there was one trade. You have 9 shares at $31. Come on, ASX. That's ridiculous. Anyway, Austal down 22.22%. They went into trading halt yesterday before trading began. for a capital raising. Yep. And it was an acquisition as well, just an equity raising. And they raised $200 million institutional placement to expand US capacity. I'm not sure this is the best use of capital because they could be doing this in response to increased demand. But what happens if that demand starts to slow down? They've got too much capacity. We saw this with a lot of companies, retail companies, after COVID, when they significantly increased the inventory because they thought the good times were going to last forever. Kogan's a great example of that. And they had to, it really affected the company in a negative way. So I don't know this company all too well, but I'm just wondering if this is the best capital raising. However, in saying that, it must have been at a pretty good discount. So the share price was $4.50. I would say it'd be really disappointing if it was done at a 20% discount. And it seems like it must have been done at that. That would be really disappointing. They really didn't really need to do that, I think. And where it is, here it is. It's not a 20% discount, it's 15.6. And it's done at $3.80. So the market doesn't like this capital raising at all. Share price at $3.50. And the problem with this is that placement to institutions, they're out of the money now. Share price is 10% lower than what they've got shares in this placement. And they've also, are they doing a what do you call it? A share purchase plan? Yeah, they are. For eligible Austal shareholders, up to a maximum of 20 million. Why would you participate in the share purchase plan when you can just buy shares on market at a significantly lower price? Yeah. So anyway, I can't complain management for doing this. This is what they should do. Raise capital if they want to when the share price has gone on a really big run because it's really beneficial, less dilution to shareholders. And the only problem with this is I think it shouldn't be done at such a big discount. And there is also the potential that this has put a bit of a dent in the momentum in the share price. Just a potential. I don't know. We'll wait and see what happens over the next few days. The other interesting thing is now the share price is well below the capital raising price, and that is not a good sign either. Anyway, so that's Austal, the stock of the day. And let's have a look at one of your comments. Sankar5228 says, "Hi Kneppy, thank you for your daily uploads. What do you think about Genusplus chart? This is relevant because I am trading at Genusplus. This is one of my trades, and it's not a trade that I'm close to getting out of just yet. I put a little bit of leeway there. So the share price can be a little bit of volatile. And we saw that when they released their results on the 24th of February. Share price dropped a fair bit on that day and then rallied, which was actually a good sign. Share price now just on the that's the 100-day moving average. So it's okay. We've seen this quite often. Share price dips to like the 100-day moving average and then rallies. And to be honest with you, share price hasn't dropped all that much during this 10% correction in the overall market. That's also a good sign. So it's performing better than the market. And you have no qualms maintaining a trade in Genusplus. Also, their results were quite stunning, quite wonderful results from the company. And let's have a look. I'll just show you the company's results. By the way, the market, okay, it was rallying and then the market sort of dipped away. So let's go back to the XGO. No. I'm talking about Genusplus here. So let's just have a look at the media release. Here it is. Their results. Now, the results might have maybe slightly disappointed the market because share price was down, but these were quite stunning results in isolation. When I say isolation, I'm not comparing it to expectations and that sort of thing, but when you just look at the percentage change, pretty stunning. So revenue up 33%, EBITDA or normalized EBITDA up 25%, normalized EBIT up 36.6%, and net NPAT up 51.4%. Pretty good numbers there. And I think the positive momentum behind this company is going, or tailwinds behind this company are going to continue for a while yet. The only thing that could go wrong now is just maybe if we go into recession or depression. And that's going to hurt every single company out there. But they're all about communications infrastructure, power and communications infrastructure. And that is something that is going to be needed. We have to upgrade our power and telecommunications or communications infrastructure. That's an absolute must over the next decade or so. So they definitely have a lot of tailwinds behind this company. Okay, so that's the only question I'm going to answer in today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.